Hello guys, welcome to a new video. My name is Sad and this is my YouTube channel, The Trading Journey. If this is the first time you hear about me or you watch this video, please don't forget to subscribe and hit the alert button so you can be notified every time there is a new video. If you like the video, by the end of it, please press like and share it with your friends. So today's topic, as the title shows, it will be all about how I mark up and identify my key levels within the market. So basically, on a normal day, me opening the chart, going on trading view like you see on the screen, I will ignore the 1 hour, I will ignore the daily chart, I will go straight to the 4 hours. The reason being is that it's very clean, and it does make sense when you try to chart it, and it's not very choppy if that makes sense. So basically, as I said, on a normal day, I will go straight to the 4 hours chart. This is my trading view. This is my candles. The blue ones are bullish candles. The black ones are bearish candles. The reason behind the colors is just based on psychology. I'll explain it in another video, but this is the colors that makes me feel the most comfortable within the market. So basically, I'm gonna draw some levels here before actually taking you to the actual chart so you can understand and be aware of it. So let's say these are the charts. Let's say this is a bullish trend, for example, going up, pulling back, going up, pulling back, going up, then coming down, then pulling back up, then coming down, for example. So there's so many traders that will mark up and identify the levels within this trend in a different way. But personally, I ignore all small levels and I jump to the big levels. So the small levels, which are called minor levels, they will be identified like this. So this is a minor level. This one is a minor level. Those levels, I don't use them, I don't rely on them in any sort of strategy. Why? Because they can change from an hour to another. However, the levels that I rely on are the big movements, are the levels where the price went to and rejected massively. For example, it's very clear. This is a big level. So this would be my level. This would be the first level that I would have. The second one, which I didn't draw, but if I did draw, it would be something like this. So this is a major level for me personally. So I draw these levels all the time. So basically, within the past almost 2 years, from backtesting, from drawing levels, I finally came up with these levels that are very, very strong. So whenever the price goes to them, it either breaks them, comes back to them, and keep going up, or once the price touches the level, it jumps away. So, in this situation, what I usually do, if the price breaks above this level, we are buying. If the price breaks under this level, we are selling. Whatever happens in between these boxes or these two levels, I don't touch it at all. I will tell you why. Let's say you are looking for a buy, right? And this is your minor level. As a beginner, you will see this as a level, this one. You'll be like, oh my god, that's a really good level. Then you're gonna mark it. Let me change the color for it so you can understand me correctly. So you would say this is a level, right? You will really like it. So you would wait for a break, then a retest for this level, and what you're gonna do, you're gonna obviously buy. So once you buy and you stop and your take profit somewhere is here, the price will hit my level, which is a very strong resistance level, and gonna start go down. So it's gonna start going down and you're gonna lose the trade. Then over time, you're gonna be doing it over and over and over again until you give up. then you'll be like, oh, Forex doesn't work for me, or that level is not strong. What I studied in that book doesn't make sense. What that guy taught me on YouTube doesn't make sense. However, you lost because the level wasn't a major level, it was a minor level. I've had this issue multiple times when I started my journey. So once the price comes down here, you will be like, oh my god, the market is selling. Let me sell. So what do you usually do? Wait for the retest of this level. You sell the market. Your take profit is somewhere here. However, the market hits my major level and start going up, then you lose the trade. Does that make sense? I will try to explain it a little bit more simple. So there is a major level, which is the gray box. There is a minor level, which is the red box. What happens here, what happens around here is not our concern. Whatever happens there, either a break or retest to the upside or to the downside, it's not our business. We don't want it. However, once the price breaks out of the gray levels, this level, the gray box, then we start looking for a break and retest. Why? Because the majority of the buyers are in this level and the majority of the sellers are in this level. They are not interested in this level. Because on other time frames, for them, this level is just consolidating. It's just a consolidated market. And if you studied enough, you will know that Forex traders don't really like consolidated markets. They like trendy markets. They either buy or sell. They don't go as I will buy here, I will sell here, I will buy here, I will sell here. They don't do that because that will be just playing around and you want to be really consistent over time. So these are the levels that we said. Gray box, major level, red box, minor level. We don't play with the red box, we play with the gray boxes. So we're gonna go to the market now and I'm gonna show you. Let's delete this. So, alright, I go to the 4 hours. I will identify first the minor levels and then I will identify the major levels. I will start with the minor levels that every single trader will see, but they're not very strong. So there is, let's say, um, minor level. Let's say there is this one. Why? Because look, the price came to it and it rejected. Every beginner trader will be like, "Oh my God, that's a really good level. I will hold it as a key level." But it's not a key level. I'll tell you why. Because look what happened here. The price came down, as I said before. So this is a level you think it is. The price breaks the level. You wait for the retest. You put your TP somewhere here. However, what happens? The price goes against you and you lose the trade. Then it goes in your favor all the way to your take profit. Why? It's not because what you studied was wrong. It's not because all the time you spent on the chart wasn't enough. No, it's simply by identifying a key level that is not major. It's very, very minor. And the price doesn't really reflect or react nicely when it gets to it. So that's a minor level. I will do another minor level. So let's say there is, for example, this level. It's also minor. So everyone will be like, oh, that's a really good level because the price jumped out of it. It really didn't jump enough. So that's not a really good level. I will show you the levels I mark up. I hope you guys understand me 100%. If you don't, just keep commenting and I will actually maybe explain it in another video or just try to explain in a better way. So when I come to the market, I zoom out. The reason being is that I don't want to get very confused because if the chart looks like this, you can't really do much, can you? You don't understand what's happening. So you always have to think outside of the box. So you have to zoom out and see it from another view. So now it looks a bit clearer, yeah? So what do I do is I start marking my levels, only major levels. So the major levels are something like this. Um, Something like this. Look at the price. Came here. So the price came here and jumped straight away. It didn't jump only here and start going like this, but it jumped all the way up. That's a very major level. That means that's a level we want to look at. I'm gonna change it to gray. There is another major level here as well. Look at the price. The price came all the way down and jumped straight back up. That's a very strong level. So you have to keep paying attention to these sort of levels. There is another level. Let's identify a good level. Yeah, there is another good level here. Again, the price came all the way down and went all the way back up. So that's a very strong level. There is another level here. Same thing. Price was going up, hits the level, start going down. There is another level here. The price came back to it, couldn't break it, retraced, went back up to it, couldn't break it. Then what happened? The sellers pushed the market all the way down. So those are levels that I usually look at when identifying key levels. Um, so when identifying where to buy, where to sell. Sorry. So this is a very strong level, very strong level. Why? Because look at the market, look at the price. Came back to it, reacted massively to it. You see it. Why is it a strong level, and what's gonna benefit us? I will tell you now. Do you see that this level aligns with this level? So basically, if you're looking for trade and you already have this level here, let me delete all other levels so I can give you an example so you don't get very confused. I know this might be a bit confusing at first because that's what happened to me when I started trading. However, with time, you're gonna actually identify the levels without actually thinking or overthinking it. Alright, so let's see this level. This is, ladies and gentlemen, is a support level. This is, we call it support. Support as once the market went to it and start buying. This is support, right? Have you ever heard that past support is future resistance or past resistance is future support? What does that mean? That means the price came here and bought. However, in the future, which is here, the price will come back to that same level, but it's not gonna buy, it's gonna sell. So what's that called? I just said it. That's called past support is future resistance. So this is the past and this is the future. Look at it. It's the same level. Literally the same level. Very simple. So once you identify the correct level, it has to be very strong. It has to be like once the price goes to it, it's bounce back or it reacts to it all the time. That's a very strong level to identify. You don't waste your time on minor levels. These are major levels where the big sellers or the big buyers are sitting at. So Forex is like, obviously it's a market. However, there is small buyers, small sellers, and there is the big buyers and the big sellers. What's the difference between big buyers and big sellers? The difference between them is the big sellers and the big buyers bring so much volume to the market. What do I mean by volume? Volume means when the price comes to a level, it goes down massively. That means the heavy sellers, the ones that are holding a lot of capital, are sitting there, right? They are sitting in the major levels. The small sellers or the small buyers are sitting in minor levels, something like this. They are sitting here. So they are literally here. Just imagine them in your head. They are sitting here. So those are the sellers, and they are sitting there waiting to sell the market. But because they are small sellers, they couldn't take the market down. The market reached here, then it started going up. Then it reached here and start going up. So they are very small sellers, very small buyers selling, sitting at a minor level. So we want to avoid the small sellers, we want to avoid the small buyers, and we want to avoid the minor and small levels. We only want to go with the big traders that hold a lot of capital. We want to trade with them. So once you start ignoring the small sellers and the minor levels, and you start focusing on the big levels, that's how you actually start making money in the forex market. So as I said, past support is future resistance, right? So when the market comes back to that level, you look left and go, oh, that's actually past support. And it's a very strong support because the big buyers pushed it all the way back. They pushed it back so high. That means whenever the price comes back to that level, we might see something. We might either see the sellers pushing it all the way down or see the buyers pushing it all the way back up. So it's a very, very strong level. We're going to identify another one or two levels, then we're going to finish today's video because I don't want to go past 20 minutes. Maybe I will just identify one more level. There you go. There is another clear level which is past support, future resistance. There is this level of support when the market came to it, it went back up multiple times. That means the buyers are trying to push the market up in that level. Therefore, it's a very major level, very strong. So what happens if the price breaks down? We wait for it to go back to that very strong level. If it does go back, that means we might see a trade. So look here, the price went back up and start going down massively. Therefore, the sellers are sitting there, and therefore that's a resistance level. That's a major level for us. We like to see levels like this. We want to ignore levels like this. We want to ignore small levels like this. I'll put them red. And we want to focus on big levels that have big volume like this. Something like this. We want this. We want to see this. We love this. And this is what actually makes us money in the Forex market. Thank you very much for watching today's video. It's been a great video. I hope you guys understood what's happening between support and resistance. And the next video is going to be very, very interesting video. It's going to be a build-up video on this using key levels, major key levels, to identify the trends within the market. Thank you very much for watching me. If you like the video, please subscribe to my channel, like the video and share it with your friends so they can understand what's happening in the Forex market. Thank you very much and have a great day. I will see you in the next video. Thank you.